Good morning, everybody. It's Christopher from Student Education with the 4 Majors Notes update for the 9th of December 2013. Hi, guys. Hope you had a fantastic week with family and friends. Let's look at the 4 Majors this morning, starting the euro against US dollar. Okay, so what happened on Friday? Nikki and I were not trading on Friday, and non-farm payroll, first week of a new month, or first Friday of a new month. And non-farm payroll figures were brilliant. Looking at the stats over here, we had for a forecast of 180,000, and it came out at 203,000, so almost a 23,000 thousand more jobs. So, and the unemployment figure was also low. They were expecting a forecast of 7.2%. It came in at 7%, which is fantastic. And the other figures for that particular day, the prelim consumer sentiment figure was also really good at 82.5. So a lot of good news for the US market, and which in turn saw, which was very strange, we saw a bull candle on Friday. Very interesting. Thursday was a great one. That Thursday candle breaking higher than this prior considered support and resistance level, almost a weekly resistance level after the 23.6 weekly fib had been breached, but we didn't get a really true bullish engulfing candle. We had a breach of it, a pullback, but not a very substantial bullish engulfing candle, and then we had a breakout to the downside. Then reconsolidation on this little upside trend, and then we had a hangman potential. It was sitting above, so we wanted to see a bullish engulfing candle to confirm that was a genuine hammer and not a hangman at this price support and resistance level. And on Thursday we did get that very positive candle to the upside. And then with the US data coming out really positive, we'd expect the euro to fall. However, that wasn't the case. We did see a slight consolidation at first on Friday. However, you can notice, you see on the daily, we had a nice pullback on Friday. However, by the end of play, we saw the euro rallying against the US dollar and closing higher. So now very much forming a new swing high, and now ideally we should be looking to the current high now, which is our monthly high, which is at the 61.8 level, which is the high that we've seen here back in October of this year. So we're looking in excess of, let me just get marked there, we're looking probably between 140 odd pips. Take away the spread, still more than enough. But you can see on Sunday evening, very indecisive trading range, very small trading range, and then this morning on the Asian session even smaller. So price very consolidative at most at the moment. After that break that we saw on Thursday and Friday, you can see the long-term sentiment over here is very much up. Directional is up. We have a bit of indecision on our smaller time frames, primarily because, as you can quite clearly see, we haven't had any trading range at all. It's been very consolidative. But what we have is, we still have a long-term sentiment. We have had a genuine break of a weekly. Now we should be looking to the upside. Ideally a break of the current daily high. So we take the daily high, which is our Sunday evening high, drop down to our 4-hour time frame. Straight away we get a buy opportunity signal because everything's in favor. If you look at the 4-hour time frame, everything is positive, which is important. Swing high, dictating upside movement. So therefore we should be looking for an opportunity to enter. Here you can quite clearly see that everything is positive bar the Osimo indicator. Why? Because it's now showing us bright or dark green, and dark green means that there's no true sentiment in that move, and rightly so, because you can see that the past 12 hours, in fact, price has been very consolidative. So what we want to see is a 4-hour candle close above the daily high. I'm going to just get this here and move it down. So we want price to be closing roughly around the 1372, above that area on our 4-hour candle, and then we look for an hourly entry towards a 61.8 to the upside. Sterling, here on the daily, you can quite clearly see the indicator box over here very much blue. One or two areas red, but primarily everything's looking positive. The one thing we need to be aware of is the fact that price has been trading into a monthly fib recently at the 38.2, and you'll notice straight away that we have a major resistance level here. Price has failed to actually close higher than that. Yes, it's traded above it a couple of times, but it's failed to close higher. Here, in fact, we had a bearish engulfing candle, we had a hangman, and it pretty much closed lower. However, price has been consolidative now at the underside of the 38.2. It hasn't really pulled back as much, and in doing so, you can see the RSI is still wanting to move higher. The Osimo indicator is still dark green because we've been in consolidation, which is ideally the case. The RMO is still above. Yes, histograms have dropped a bit, but still nonetheless above the 0 level. So what we want to see is a clear, if we want to see further highs for sterling, we would need to, we want to see and would need to see the 38.2 being breached and closed above. Get it close above that, then I can start looking towards the prior highs, which is that dotted line to the upside, which is my first point of call. And you're looking in excess of 300, just over 300 pips, take away the spread for that particular pair. There's some nice juicy targets to the upside above that level. But as long as price is finding resistance here, there's more likely for price to be consolidative, and if it's consolidative, there's more likely for price then to start to change direction or sentiment. So very, very important. If we are to see any further highs for the sterling against US dollar, we would need to see them happen as soon as possible. The longer we start seeing price moving sideways here, the more likely price is going to start to drop. US dollar Swiss franc, here falling low over the past couple of days, in fact, very bearish indeed, and falling towards the price support and resistance level lows that we saw in the mid-October range. And we're trading right now at that level, so you can quite clearly see price is trading at the level, and we've seen consolidation because of that. So anybody shorting over here near term would have taken this as their target, and once they've got to it, now they're starting to take a bit of profit, and subsequently what price is doing now is consolidating because of that profit taking. You can see the long-term sentiment is very much negative, and the R-squared is complementing that. However, the profit taking intraday, you can clearly see here on the indicator box at this level. So to see any further negativity, what would need to happen is price would need to break the near-term weekly fib over here at the 38.2 level, and once that's concurred, then we can start looking down towards the next weekly fib level, which is in approximately a good 670 odd pips to the downside. So there's more than enough in the tank for further negativity if and when price closes below that. Now it's consolidated. We could see a knee-jerk reaction. It bounced over here. We want to see this clearly breaking. If it fails to do so, then we're going to see consolidation. You can see that the indicator is still telling us we should be looking for negative sentiment. You can see that we have red arrow, red candles. Everything's looking low. RMO low, RSMO indicator low, RSI still below. So our thought pattern should be looking for negative. However, we are trading at a price support and resistance level, so therefore we should see consolidation. The only thing we should be looking for is bearish engulfing candles. The moment we start seeing bullish engulfing candles, then we should start targeting prior highs or swing lows that we've just come from as our first and second targets. Last pair of the day, US dollar Japanese yen. Here, after non-farm payroll, we saw a nice rally to the upside. There we go. Friday, we had a slight consolidation on Thursday, Wednesday, and Tuesday from the Monday high, and this is primarily price was trading into the weekly fib level, and subsequently we had a nice breakout of that wedge, and you can see how price actually rallied quite nicely. Swing high, swing high, swing high, swing high on the daily. However, as we headed into the weekly fib level over here, traders started to take a lot more profit off the table, and hence we had a sharp pullback. However, non-farm payroll figures on Friday really saw the US dollar rally against Japanese yen yet again, and we saw a nice bullish engulfing candle close higher. You'll notice that everything else is in order. Our indicator box is still very much telling us we should be looking for highs. However, we are trading into a major weekly fib level high now, and you can see that the RSI indicator has pretty much died off as we've headed into this major resistance level. RMO is still rallying because it's still very much on a strong uptrend, but you can see the RSI now, price is testing the prior high, and you can quite clearly see that the RSI is starting to show a bit of divergence now. So we just got to be very, very hesitant in our approach. If we see divergence, and that divergence is occurring at a major support and resistance level, in this case at a fib level high, weekly fib level, then we could see a potential for price to consolidate. Well, the only thing that's actually going to cancel this potential negative consolidation pattern is a bullish engulfing candle close higher. So we've got to look at the news this week, in fact, for the remainder of this week, to see if there's anything that's going to actually help the US dollar rally and breach this weekly fib level, resistance level here, to see any further buying opportunities. Once it's done that, then we could start to target our monthly fib, which is approximately 186 pips from the highs of the weekly fib breakout levels. Failure to do that and we get a bearish engulfing candle, then we should look back to price swing high support levels as our first and second targets for the remainder of this week. Guys, if you look at news, we had some news out yesterday, in fact, for China. If I can just get my let's have a look at the data here. We had the Chinese trade balance figures out yesterday, which were very, very favorable. In fact, the previous figure was 31.1 billion. They were forecasting a negative, almost a 10 billion dollar difference at 21.3. In actual fact, it actually came out higher than the prior figure at 33.8. So very, very good, strong news for China, and that would have had a positive outcome for any Asian currency crosses, i.e. Australian dollar, New Zealand dollar, etc. The Japanese current account, however, was negative. The prior figure was negative 0.13 trillion. They were expecting a forecast, a positive one of 0.12 trillion, and it came out at 0.06 trillion. So still better than the prior figure, the previous figure, but no better than the actual forecast. So the final GDP quarter-on-quarter figures for Japan was for contraction. They were expecting a 0.1% difference in the contraction. They came out at 0.2 difference from the prior figure. So not really good for the Japanese market, and that's obviously going to spur the US dollar against the Japanese yen. So what we want to see, if we are to see any further upside for the US dollar Japanese yen pair, we do need to see this weekly fib level here being breached. Further to do so would then stem to look for further consolidation with an outcome for negativity to come in. My only concern is the Osmo indicator here very much negative, or it's still positive, but very, very flat as we head into this price support and resistance level high here, or the fib level highs. We just got to be well aware of. Okay, guys, that's it, short and sweet, to the point. Please look to see if there's any news out today that's going to reflect on any of the pairs that you are trading. German trade balance figures have just come out now, and they are far worse than the forecast. They were expecting a contraction, but it came out even worse than the actual forecast. The previous figure was 18.7 billion. They were forecasting 17.4, so a noticeable drop of 1.3, but it came out at 16.8, so a noticeable drop compared to the forecast. That's not really going to have a really good effect for Eurozone. And today we also have Euro group meetings all day, which is also going to see a lot of speculation in the market, if not any movement or whatsoever. We also have German industrial production month-to-month figures out today. We also have the Bank of England Governor Carney speaking later this afternoon. So there's news out there. Please factor it into your trading today, if and when possible. On that, also apply money management, guys. It's also very, very important to apply the correct money management rules to any trading strategy. You've got to back it up with some money management rules. If you don't, then you're likely to make more mistakes, and you're likely to walk away with no potential profit at all. So keep money management in favor, in check, and as well as having a fantastic trading plan to follow. On that, I'm going to leave you with that. Hope you have a fantastic trading day today, and I'll catch you guys first thing tomorrow morning. Until then, you guys trade serenely.